All right, everyone, let's work on problem 12.4 from this chapter 12 homework here. And in this problem, I've adjusted it just a little bit in terms of what, if you were to look in the homework from the class packet that I handed out earlier in the semester, and I put the accounts in a trial balance format specifically. I just think that's a little easier to be able to digest. It's easier for me to be able to analyze. And, if you come to understand how a trial balance works, that's something that you will see very often in a professional accounting setting. And you're going to be able to look and see, okay, all my assets are typically grouped at the top, then liabilities, then equity accounts, revenues, expenses, etc. So anyway, with that said, let's get started. So we're going to do our multi-step income statement to start. And so we can just kind of link in off the trial balance. That's another nice feature of having it set up in that way. So we've got sales as our first line item there. And then we're going to have sales returns and allowances and sales discounts. Both of those are contra revenue accounts, remember. So those will both reduce from sales to get net sales. And then we're going to take out cost of goods sold. So we'll have that expense. And that's going to take us to arrive at gross profit. And just to highlight one thing, I think this is probably clear as we've been doing this for a while. But when you do have line items in one specific category that are, some are additive and some are subtractive, like we do here to get to net sales, that's where you'll see negatives. But do remember that cost of goods sold is a reduction, kind of has a negative impact on sales to get to gross profit. But since it's the only, line item in that specific grouping in this area, we don't necessarily list it as negative, like we would up here where you have kind of a mix of positives and negatives within a given category. So just to highlight that. Okay, now let's get down into operating expenses. One thing that's really nice about having a trial balance with operating expenses grouped kind of effectively there is we can just link in to, say, for example, the bad debts expense as a starting point and just drag down to capture all the accounts here. And then we go into more of the other categories, so gains, losses, rent revenue. Rent expense would be as an operating expense, but typically rent revenue is other, unless it is a business that primarily collects rent revenues, maybe like a rental company or a real estate company or something. But in most instances, and you can kind of see if you compare sales is so much bigger than that rent revenue. It's probably just, the company had an extra building to rent out kind of thing. So so we can just highlight all those. And one really nice thing too is they're all debits. They're all right next to the names of the accounts. And so we can just highlight all these cells and then drag over, and that will just link, each one of these over into the next category there. Looks like we need to do a little formatting work just to get that to look good, but do that and then add those all together. So we get total operating expenses of 370. And then, like I mentioned, we've also got our other accounts kind of grouped there. And so we can just go down the list, pulling all those in. So that then captures everything that's other, and other gains, losses, revenues, expenses. We'll fix there on the typo. This is another situation where you have gains and you have losses, and so gains are going to be positive, losses negative. And again, so all of these are negative effect to get to net income, but they're all expenses and they're all in one category. So here again, we've got one section of the income statement with mixed pluses and minuses. So that's where we want to put positives and negatives in place to understand what's adding, what's subtracting. And so our gains are going to be positive. Our losses are negative. Rent revenue is positive. Interest expense is negative. Interest revenue positive. So the net effect of adding all those together is 20. That brings us to a pre-tax net income of gross profit minus operating expenses plus other, because it's positive, I guess we could always do plus, and it would just be a negative result if it was more negatives than positives. And then the last item on the income statement here is just our tax expense. And so that's $104. And the way that's calculating too, it just, we have the rate in here. It's, take your pre-tax net income times 20%. Yeah, that's a simplified way to get a tax number. Real taxes are much more complicated than that, but it gives you kind of an idea of what you would sort of do to calculate a tax number there. It's based on net income, essentially, is the idea. So if we reduce that from pre-tax net income, we get 416, and that's our net income. Okay, then on our retained earnings statement, we have net income. So, the first thing, let's bring in our beginning balance of retained earnings here. So that'll be 80. Bring in net income, 416. And then we have dividends. Don't get that mixed up with dividends payable. That's a liability that reflects the fact that we're going to pay future dividends. But this is actually our dividends account. That's going to be, this one's also going to be a negative. That's going to reflect the payment out of equity that really did happen, as opposed to the payment out of equity for the payable account, which is going to happen in the future. Alrighty, so now we're down to our balance sheet. And again, we've got all of our current assets grouped together up here. So we can go in and just drag that down, and that pulls in everything between cash and supplies. And everything beyond that is going to be more not non-current. It'll be non-current assets. So we can go back up to cash. We'll just drag that down. Be careful. The one thing to keep in mind is that our allowance for doubtful accounts, contra asset, is going to be negative. So we got to be careful to link to the right cell there and then make it negative. Uh-oh. Did not work. I think my Excel sheet could be freezing. No, okay, still seems to be working. For some reason the auto sum button isn't working, but that's okay. Okay, so that was our current assets. Now let's go to our long-term investments. And we have land held for speculation, remember, as opposed to land used for operations. And we have a note receivable, both going to be held, long-term, hopefully in the hopes, geez, that's really annoying. That's not working. In the hopes that they are both going to appreciate in value, and we can sell them in the future for a gain, what's called a capital gain. You'll learn about that in tax class if you continue going. A plant asset. So now we're going to be talking about depreciable stuff and land, but used in operations. So we've got the building, accumulated depreciation related to the building, machinery. There's no accumulated depreciation related to the machinery, so it's kind of interesting, but I guess we can assume it was bought maybe right at the end of the year or something. But that is one thing you might look at if you're a savvy accountant and say, oh, maybe we forgot to do depreciation on the building if it has a zero balance. On the machinery. But for our purposes, we're just going with what we're given in this problem. And we didn't get any. Okay, so 425 is our total plant assets. Now we're going to go to intangibles. Start with our goodwill. And that brings us all the way down, patent, copyright, trademark. And then we're going to go into the liabilities next. So that's everything there. Let's bring in all the totals. Oh, it worked that time. AutoSum's working. That's funny. Okay, so then we'll add together all of our different asset categories to get total assets of 997. All right, now let's look at our liabilities. So let's start with accounts payable. Oh, too far. I guess we do have one extra little space there because bond payable should really be in more of a long-term liability. So we just need everything from accounts payable to sales tax payable. Oh, you know what it is? There's one extra liability that is a little bit down out of the way. It's more with the equity accounts, and it's dividends payable, which we'll have with current liabilities. Typically, dividends payable, if they're declared and payable, they are usually paid within a year. So having them in current would make sense. But then our long-term liabilities, like we started there, so bond payable. We have our premium on the bond payable. So remember that little nuance from, I think it was chapter 9 and 10, I believe. Anyway, the chapter where we talked about all those things. We got so our premium adds to the bond payable amount. If we had a discount, it would be a contra liability reduction, but it's a premium, so it's an additive item. So then we add our liabilities together. And we're now down into equity accounts, and we have common stock. But be careful. One thing to watch out for is we don't want our beginning retained earnings. We want the retained earnings that we calculated. So that's a little bit of a tricky thing to watch out for there. But common stock, we do want the starting point there. And then treasury stock is a negative, so be careful for that, because remember, that's a contra equity. We bought back our equity. And then we just add all those together, and then kind of the moment of truth, and we'll have a check figure that we'll calculate, but liabilities and equity is, what did I do wrong? Moment of truth, that it doesn't add up. Okay, I think I've got something off on my, shoot. No, let me redo this. So bonds payable. Make sure I've got these all in here right. So 215, now that looks good. All right, now I got to troubleshoot myself one more time here. Oh, dividends payable, I think, came in with the bonds payable number. Yep. Not that one, though. This one, 10. There we go. Okay, now it looks better. So then for our check figure, just to ensure that we're matched up, which would have showed that we weren't just now, is you can take a formula there, equals assets minus liabilities and equity, gives us 0, which is our check figure, and we can say, okay, cool, assets equal liabilities plus equity. So we balance, the accounting equation is balanced, and we're happy, and everything is looking pretty good. So that brings us to the end of the chapter 12 homework. And just a few things, to kind of watch out for. Look for the contra accounts in the various categories. Make sure you have the pluses and minuses correctly when you're looking at other gain revenues, losses, all that stuff. Pull in retained earnings, calculated ending balance, not the beginning balance. And make sure your assets equal liabilities plus equity, and you're good to go. So that brings us to the end of chapter 12 homework. Thanks for following along, everybody, and I will talk to y'all soon. All right, have a good one, and thanks for following along.